Welcome and thank you for joining us for another equity development interview. We are here today with Paul Edwards, the CFO of Tatton Asset Management, who only yesterday announced a trading update to the end of September, and along with that some extremely strong numbers in terms of assets under management and the development of their consulting business. Welcome, Paul.
Hi there, Hannah.
I think first thing to say is obviously you saw great growth of assets under management, but not necessarily simply driven by good performance following the bounce in March in shares. You also saw net inflows, which is extremely positive in a time of big uncertainty. So what do you think were the drivers behind that?
Yeah, I mean, Tatton over the, certainly over the last few years, we've actually added over £1 billion a year. And in the first 6 months of this year, you're absolutely right. It was around 17.4% increase, which is just over £1 billion, 1.1 billion. Of that, 328 million was new flows, which I think is a great performance in what's been obviously a difficult market over the last 6 months. I think, when you look back and you say, what are the core reasons? Well, I think, it's all based around the strong proposition that we have. We're very competitively priced, so we're probably, the least expensive proposition out there. We have a very long track record, and we've built a strong brand certainly over the last few years since flotation, and that worked very well to support that. And we have we're across all platforms, so we're platform agnostic, and we've had great levels of service. So I think when you combine all those those factors together, what you end up with is a very strong and compelling proposition for the IFA.
Well, let's look back on the IFA particularly. Obviously in the March, I'm sure that they were busy organising their own business, moving towards a working from home environment.
Yeah.
But yet, did that hamper your ability to sell to them directly?
I mean, there's no doubt about that. I don't think there's many businesses out there that in some way, shape or form haven't been affected by the pandemic over the last 6 months. And actually, the IFAs themselves, have been affected in their ability to deal and contact and speak with their own clients. I think early lockdown, I think Tatton pretty much seamlessly transitioned to the sort of whole working from home. We adapted to new ways of working, but also communicating with our IFAs as well, and that's been a journey that we're continuing to this day. I think early on we did a really good job, communicating with the IFAs from an investment perspective, and Lothar and the investment team did a really good job there, and I think that was really well received. And in the context of sort of early March time, I don't think you could have actually over communicated with the IFA community at that standpoint. I think we've continued that actually. We've continued communicating well. We've adapted to new ways of working. We've adjusted our product predominantly from a sort of person-to-person contact model to more one which is sort of web-based engagement through sort of a suite of online meetings and virtual events. But to be honest, actually, it's really led by the IFA's own business model and their needs and their wants effectively. So I think it's been a big change. We continue to adapt our approach, but overall I think it's been well received.
Well, and changes which I'm sure you can roll forward, as well as combining them with more of the traditional face-to-face. So a change for the longer term, which sort of plays into the next thing I want to talk about, the bigger picture. Obviously asset management, well known for their operational leverage. You saw your revenue increase sort of circa 12.5% and operating profit nearly 22%. Any reason why these trends in terms of operational gearing can't continue?
I mean, I think you have to differentiate between the business models within the group. So consulting is more of a traditional business model, albeit it's high renewable income stream. But when you look at Tatton, it's an asset management business. Asset management businesses models support strong operational gearing typically. The marginal revenue that you obtain through an increase in AUM doesn't necessarily increase the marginal cost within the business, and so what you've seen is an ongoing margin improvement in that business over the last few years, and there's really no reason why that shouldn't continue going forward. That said, we have continued to invest in the cost base where necessary. I mean, just this year, we've added new costs in terms of supporting the sales and account management function. We've also invested in, our IT systems and so forth. So I guess what I would say is that while we'll continue to invest in cost going forward, what we haven't got in front of us is any significant cliff edge or any significant step up in our cost base.
Fair. Now, obviously, up to now we've been discussing Timmel, but you do have the paradigm side of the business as well. Tricky time for anyone selling a mortgage,
Sure.
Certainly in March and April. But the consulting business has gone well, and you've still seen a tick up in member firms on both sides. Is that correct?
Correct. Yeah. We said before, didn't we? The IFAs and advisors and intermediaries generally have had their own challenges. But we progressed well over the last 6 months. We certainly, from a consultancy perspective, we marketed that business a little more strongly, and that proved positive. In terms of the 2.5% increase in our member base, so around 10 new members over that period. And then from a mortgage perspective, we've consistently grown that base over the last 3 years at approximately about 10% per annum. And what that really boils down to is, strong service standards. From the standpoint of, we solve complex issues, for our intermediaries, ones that they can't solve themselves. And I would argue we have a reputation for having the, probably the best service desk in the industry. We've built a significant amount of trust over that period. We're well placed, for those that established medium side firms. We sit between the manufacturers and the lenders. The manufacturers, which are the lenders, sorry, and the intermediaries, and we represent both parties equitably. Obviously, we're looking to get the best deal for the members, but I think there's a significant amount of trust there. So the relationship is very equitable. And then there's the overriding commercial reasons, which, we don't have sort of the reams of conditionality in our service, where if you use us for one thing, you have to use it for something else. We rely on the fact that, the proposition is competitively priced, if not the best price from the strong service standards. And again, so when you add all that together, it creates a very sustainable business model that I think that's highly valued, by our members and prospective members.
Very positive story all in all then, Paul. So good luck in continuing those trends.
Okay.
And I look forward, I hope we'll speak with you at your results in about a month's time.
Yeah, okay, 18th of November. Thank you very much.
Thank you, Paul.